So that includes retinal disease as well as neurological disease. Our first targets are, in fact, age-related macular degeneration, which is shown here, and it's the leading cause of vision loss in individuals over 50. And it starts out with central vision loss that eventually moves into the periphery. And the primary challenge that these patients face is that clinicians are not able to objectively monitor their patients between treatment visits, which typically occur every few months. And it's very common for patients to come to their clinical visits either too late, where they had new disease that was not treated on time, or too early, where they come to the clinic and they didn't have to, which is a hassle when you're low mobility and low vision. So our device aims to improve clinical care by providing daily patient monitoring to supplement these monthly clinical exams, as well as providing physicians with objective data that they can use to make more informed treatment decisions. Okay, thank you.
Thank you, Samantha. Okay, so with that, so let's jump into the basics. Okay. So the first thing is idea. I know all the entrepreneurs initially start with an idea. Everyone probably will have an idea. So the idea could be either a product or a service, and maybe your targets to B2C, business to consumers, or B2B, business to business, or it could be both, B2C and B2B. Okay. I think the main challenge why a lot of startups unfortunately fail is they have an idea, then immediately they start to kind of jump into the next phase, which is developing and then try to roll it out. I think that the main part, a lot of startup founders miss to do that is a customer survey or customer interviews, which is a very, very critical task for any startup. So that's why GLA am saying it, never ever stop this task. So once you have an idea, so first thing is you have to validate, okay, with your customers. Actually, I would like to kind of share one instance I had. I think when I was studying probably in middle school during summer, and I decided to maybe earn some money. So what I did is since my village is very small, maybe 500 families. So I thought during the summer maybe I'll buy like a peanut bar big packages, then go to these homes and then start selling maybe $1 or $2 and maybe with 10-15% margin. So I bought it from the stores, big store in my village, then started to shout, because that's how in villages a lot of people sell like mangoes or whatever it is. They just shout and then people come out in the street and they buy. So I kind of tried that same approach. But unfortunately, the whole day I was shouting and roaming around the street and trying to sell this big peanut package, but I couldn't sell anything. Then at the end of the day, I was kind of devastated. Then I approached one old lady and tried to sell. Then she told me, boy, there is no way I can buy this bigger size because I don't have any refrigerator or anything. So even if I buy, it's going to spoil. Probably I can buy maybe 1 or 2 pieces, maybe for a penny or quarter. Then what I did is I split it and I sold it to her. So that's the only thing I could sell that day. Then the next day, I kind of changed my strategy. Okay, I kind of split that big peanut bar and divided it and then start selling, and I could sell more. So then you can see you have to understand what the customer wants, or not what you are trying to sell. Then there is another instance I can kind of discuss with you guys. And we all know Bank of America. It's a big bank. But in 1900, when the founder of the Bank of America, when he started in San Francisco, in California, so he opened the bank, and nobody showed up almost for a week. And he didn't know what went wrong. Then what he did, then start and talk to this customer, potential customer, and then then ask the question, why you guys are not coming to my bank? then the customers were saying, during the day, we have to either work in factories or in agriculture field, because his opening time is morning 9 o'clock to 5 o'clock. That's his bank timing. But unfortunately, his customers are not available during the time because they are too busy, because we are talking about in 1900, right? Unfortunately, there was no online, nothing. So those customers are busy doing their day job. So the only time available, the customer is saying, I can only come after maybe 6 o'clock. Then this Bank of America founder, what he did is he changed the bank timing, opening timing, from 6 p.m. to 11 p.m. And you won't believe it, then he gained hundreds and thousands of customers, and he took a lot of deposits from his new customers and start lending, and his business was so successful. So this is another kind of incident you can see. Before you start opening your offering your product or service, you have to understand your customer base, what they need. So with that, let me ask maybe Samantha, I know when you started June Brine, yours is a medical device. So could you please tell us about your customer interviews? What kind of interviews you did?
Yeah, sure. That was such a huge part of just beginning the company. So one of the first things my team did was participate in the NSF I-Corps program, which I highly recommend for any entrepreneur. And essentially, they give you funding to travel around the country for about 3 months, interviewing every possible stakeholder that would be impacted by your product. So we went into the I-Corps program with our own set of assumptions. For example, we assumed that every neurologist would be interested in using our device for their multiple sclerosis patients. But just during the I-Corps program, and we interviewed almost 200 individuals now, they kind of turned our whole business model on its head, which was painful at first, but it turned out to be a great thing. So our approach has been to focus on asking individuals what their challenges are, what are their needs. So for neurologists, what are your challenges with monitoring MS patients, ophthalmologists, and patients? What are your challenges with communicating with one another, monitoring your disease, and just allow them to rant or talk for as long as they want to. So keeping the questions as open-ended as possible and keeping an open mind, because a lot of times your assumptions turn out to be wrong. But that was extremely helpful for us.
Okay, thank you. So you guys might have heard. So the very important thing is you have to create some questionnaire on what to ask your customer. So that's very important. So I know I'm spending a lot of time on this particular thing, because the reason is this customer validation is very, very important. There's a lot of startups are actually failing because of they forget or kind of skip this step, and unfortunately it will come back and bite them later. So that's why, so develop some sort of open-ended questionnaire. Then go after your customers. Okay, ask them. You won't believe it. You'll find a lot of information, and based on that, it will help you to then develop your product. So that's why I'm telling here, don't spend any money to develop your product until you have done your customer validation. Okay. Then the next thing is, I know for every industry, the market is a very big segment, bigger size. But for your startup, there is no way you can target the bigger market size at the beginning. So that's why try to find out some very small niche segment. Okay? Then you can go after that segment first. Then once that's successful, then obviously you can kind of scale to the next level. Okay? So that's another step you can try. Then the another thing is, so let's say now you are done with your customer interviews. Now you have your solution. Then the next thing you have to do is use all the different channels to validate again your solution, whether it's going to meet your customer needs. That's again, it's a very important thing. Okay. Then finally, from the beginning, the another thing is always take the high road. I know the startup entrepreneurship is going to be a very toughest thing. You will face a lot of challenges. But from the beginning, I think if you are maintain your integrity, honesty, and if you are highly ethical, I think it's going to put you on top of your competitors. Probably that's one thing which is a very easiest thing, but at the time it is very hard. But if you can do that, you will be kind of definitely top of 99% of your competitors. Okay, forget about your product and service. But again, I think this is something I would recommend. Start from the beginning, since you will be the founder and CEO, and you are going to be the example for your company. So once you do that, obviously that's going to be your company culture. Then down the road, your employees and everybody will be following. So that will be your culture. So always try to develop that from the beginning. Okay, next. So next thing is, let's talk about the team. So we talked about the idea and the validation. So the next important thing is, in order to be successful, your startup to be successful, your team is very important. So you have to find your core team members who can support your startup and journey. And again, just like the customer validation, never stop these tasks. Continue to look for your team members. And another thing is, when you're looking for these team members, try to find those people who have complementary skills. Let's say you have, as a founder, you have very good technical skills. Then don't try to look for other team members also have technical skills. That's not going to help your company. So trying to find the team members, maybe they are good at sales, business development, or other areas. Because when you are building, the skills has to be complementary. So that way, it's going to add more value to your company, and it could be successful down the road. So my recommendation is, so try to look for team members in the technology area so that you can build your product, and definitely look for, if you don't have the sales and business development skills, definitely look for the team members who have a great sales and business development skills. Then marketing and branding. So particularly you can target social media strategy, direct marketing, partnership marketing through events, word of mouth. So there are a lot of different channels you can try. Then also you can hire the team members who are good at handling the customer support, which is very critical. Then other ancillary areas like finance, HR, accounting, legal, those things I would recommend. You could initially use hourly consultant at the beginning. Then later on you can hire once your company started to grow. Initially, I don't think you need to focus a lot on those ancillary services, which is kind of less critical. So the critical team initially is going to be your core technology team, sales team, marketing, and the customer support. So those are the skills I would recommend focus on that. Samantha, let me ask one quick question. So for your June Brain, so how did you find your team members, and what kind of a diverse team currently you have?
Yeah, so our team includes collaborators as well as our actual employees. So the collaborators, those were the first individuals that I found to help support June Brain, and I found them by kind of tapping into my network from my postdoc experience at NIH and looking for individuals who are already very interested in the field. So retinal imaging to analyze neurological disease. And once I found those individuals, most of them are very interested in being on the cutting edge of research. So they were very happy to provide their clinical guidance to the project. But when it came to employees, I actually found them on Indeed, which was very nice. So I've had awesome luck with using Indeed, but I specifically was looking for, again, individuals with a business background because I'm very technical. but also team members who could running to build a product. But it's always a working process building the team.
Great, you're right. Thank you. Okay, with that, let's move on to the next section. Another kind of Samantha touched a little bit. Finding your mentors, advisors, team, and also the networking. For any business, the networking is very, very important. Again, this task, you have to kind of never stop this. You have to continue to do that. So I would recommend, so where do you find your potential team members, mentors, and advisors? So my recommendations are you can look for, you can attend a lot of events. And where do you find new events? You can check meetup.com, Eventbrite, or you can search Google, Facebook, or your LinkedIn. So there are a lot of networking events always happening around your area, and particularly due to COVID, now it's even better. You can pretty much attend any events across the world technically. And you can also, through your personal networks and connections, and part of your startup community, you can ask other your peer CEOs and find out where they find out their team members and advisors. And you can be part of the trade association networking organization. There is also another avenue specifically for the startups. So you can join startup accelerators. So in US, the popular ones are Y Combinator in California, Techstar in New York, AngelPad. Like that, there are hundreds and hundreds of accelerators available. So I would strongly recommend you can apply for that and part of that. So the advantage is you will get the kind of a lot of mentors network and plus other founders. So it will help you to develop your network much faster. And again, start looking for some established institutions in your community, state, and region. One thing I can say, there is a TOY organization. It's primarily for Indian entrepreneurs. So you could be part of that, and they conduct a lot of events. So similarly, you can always find out a lot of these entrepreneur-related organizations and be part of that. As I said, the networking, which is another very, very critical thing for your startup, your business. So continue to do that. Okay. And the next thing is communication. This is another thing is very, very important for your entrepreneurship, for startups. You have to keep communicating to your team, your mentors, and advisors. And my recommendation is send out a weekly or monthly email newsletters to your team, mentors, and advisors. Just explain to them in the newsletter what are the challenges you are currently facing. Because unless you told them, there is no way they know what challenges you have, right? So list out those and list out any success stories or any failures. So by doing that, your mentors and advisors or team could come up with a lot of solutions, or even sometimes they may not have solution, but they can connect to their network, or they can find someone else to help you. So that's why it's very important to have these communication channels very transparent, and the constant communication will help. Because as a one person, it's very difficult for you to solve everything. So that's why you need these mentors and advisors and other network help at the beginning. Because at the beginning, probably you may not have that budget to hire high quality teams initially. So that's why this approach will be very good at the beginning. The next thing is the ecosystem. So once you decided to be part of the startup and entrepreneurship, always part of the ecosystem. So always keep looking for good mentors and advisors and attend all these events as much as possible. So once you're part of the ecosystem, you will have a constant learning. Every day you are going to learn, and by listening to others and you can find how they are handling the challenges. So that probably will trigger some creativity for you and your team, and you could solve your problems. Okay, so I think we covered pretty much a lot of the basic things. So let me jump on to the next topic. Okay, I know, unfortunately, we are under a COVID-19 pandemic crisis, but you guys won't believe it. There are a lot of startups who started during crisis are very, very successful. Even in 2008, during financial crisis, actually a lot of businesses, new businesses actually started, and they were so successful. So same thing, I think, during COVID. So if you guys look at, as of now, the only industries are kind of thriving are the big tech companies and grocery stores and health sectors. Only those three areas are right now they're thriving like anything. All the other sectors are pretty much impacted very, very, very badly. Okay? So that's why, let's say if you don't have an idea, but you want to start your business or come up with an idea, I think I would recommend there are a lot of fast-growing areas in digital transformation and cybersecurity currently. Everything is going online. That's some area if you're interested, I could definitely look into it. Then the second thing is smart devices. Because if you analyze the Best Buy, you won't believe it. Best Buy is making billions and billions of dollars through their Geek Squad by providing these smart devices installation and services. Because nowadays, every home is come up with a lot of smart devices, smart doorbell, smart thermostat, camera, door locks, voice assistant, audio, lighting, Wi-Fi routers. So it all needs some more technical skills, right? So the Best Buy is actually providing that, and they're making tons of money. So I would recommend that's something you guys look into it if you are interested and passionate about it. Then the another area is education. As you guys all know, right now the education industry is impacted pretty badly. All the schools are moving into online, and I know some colleges are trying some online, some in campus, and some are maybe trying hybrid. But I think definitely there is a huge innovation is possible. I think you can come up with some good ideas. Because already if you look at even before COVID, already there is the edX, online universities available, Coursera, Udemy. There are a lot of online learning tools are already available and getting more popular. And I think with this crisis, I think as an entrepreneur, I think if you are interested in the education sector, that's something you can research and maybe do the customer interviews and surveys, try to find some innovative ideas. Then the other area I would recommend the retail sector, travel, hospitality, commercial real estate. These are impacted very, very badly because recently all the airlines announced earnings. They lost 90% of the revenue. Like, for example, Southwest Airlines, the last year, they earned $10 billion in 3 months. Now they earn $1 billion, 90% loss of revenue. The same thing for hotels and all the even entertainment services. So that industry is impacted pretty badly. So that's something you can look into it, see you can come up with some innovative ideas. Then logistics. So because everything is online, everything has to be delivered, the logistics is going getting bigger issues. So you could look into that avenue. Then healthcare products. Actually, the PPE products, actually a lot of startups already went into it. They are already being successful in the last 4 months. They are selling products to Etsy and online store. They are selling in millions currently. Then you can also try different approaches for direct to customer. Then another area you can look into it, restaurants, parties, graduation, wedding, or entertainment services. That industry is pretty much beaten very badly. I'll give you one statistics from L. So the CEO recently announced in US itself, almost 500,000 businesses, could be the restaurants or mom and pop shops, permanently closed because unfortunately, because of the COVID, everything is closed and they couldn't survive. So there is going to be a huge opportunity in that sector. Because another thing is, because during this crisis, a lot of competitors now out of business, and another thing is, this is the time you could find the liquidity is available, the capital is available because the government pumped trillions. So you could find a lot of resources much cheaper than pre-crisis. So definitely, even though it's a crisis, but for an entrepreneur, it's a huge opportunity. I think if you do some deep due diligence, research and surveys, you can come up with some innovative product. I think this is the right time. Definitely, you can go after that. And I do have some lists. I think these are the areas, I think based on my research, my readings, I think it's going to probably disrupt in the next 15 years. To start with quantum computing, I recently attended one event related to this quantum computing. And we all know a lot of this artificial intelligence, machine learning, we are using the classical computers. But the problem with that is it takes lots and lots of time and energy and money. But the quantum computers are so fast. Let's say if you want to solve some optimization problem, the normal computers could take maybe even 10,000 years. But the quantum computers, it could solve in days or even few days. It was so powerful. And there is one area I think they talked about synthetic data, because when it comes to machine learning, right now the biggest issue is you have to kind of teach the machine to learn, right? Which is a very, very expensive thing to do. So I think the presenter was discussing there is going to be a huge industry, maybe like come up with a synthetic data. So let me give you an example. Autonomous vehicle, right? A lot of companies are working on the self-driving vehicles. So how do you simulate the environment? Because I know a lot of self-driving cars are riding all over US, but it's very difficult to simulate the complex situation. Let's say you want to kind of create a condition, the automated car is driving the road. Let's say the school bus is on one side, the kids are walking on the other side, and all of a sudden the thunderstorm and rain and fog. So it's very difficult to create that environment. Or if you want to wait for that, it could take years and years, right? So that's something you can kind of do through the synthetic data. So I think I heard that could be another area to look into it. Then 5G, that's coming up. Then cloud computing, Internet of Things, IoT, genome sequencing, gene editing, robotic surgery, 3D printing, drones, blockchain, hyperloop, space travel, solar, wind, battery backup, fuel cell. So if you look at it, there are lots and lots of technology disruption is under progress. I think it could take maybe 10 years, 15 years, but I'm pretty sure it's going to happen. Because even if you look at COVID, I think it accelerated this technology disruption. And we all see already, right now, all the big tech companies did phenomenally well in the last 4 months. But I think one challenge I'm seeing because of this acceleration of this technology, I think it's going to impact women in our society. It will have a huge social impact. Because the reason is, unfortunately, women are underrepresented in the technology. So if you look at 80% on the technology side field is men. Only 20% are women. That's actually in the US. But if you look at other countries, actually it's even worse. Only single digits for women are actually participating in this technology. So it's going to create a gender pay inequality, because I know it's there. If you compare the pay women versus men. I know women are getting lesser than men, but I think that the technology is going to, the disruption is going to make it even worse. Unless I think our parents and I think our society address it, I think it's going to be very difficult. So I think I would strongly recommend ask your daughters. I think the main reason they are saying is because of stereotyping. I think, unfortunately, I think our family and our society always kind of promote boys are for tech and kind of girls are not tech. That's not true. Anyone can be in the tech. So I think that's why I think as a parent, I think we have to kind of reset that attitude and promote women to participate from the early stage. Yeah. So with that, actually, I'm going to stop for probably a few minutes. I think we can take some Q&A now before I cover other topics. So I think you can post your questions in the chat window, or you can just unmute and then ask your questions. And we covered a lot. So if you have your question, just please put your name, then I'll call your name, then you can ask your question. So anyone have any questions? And I know we have Nandini, so she will read any questions in the chat window. So anyone have any questions? Like I said, you can either post in the chat window. Nandini,
So hi, I'm Nandini. Ram Kumar asked, is there any methods to get investors or any resources to get in contact with them?
Okay, great question. Actually, I do have a slide regarding the investors at the next section, so we'll cover that a lot. Yes, actually, I'm recording this event. So yeah, definitely, if you need the recording, you can send me an email. Then I will share the recording and the slides presentation too.
Govind asked, what are implications of starting a business as H-1 visa holders?
Actually, if you are in H1, my understanding is you can still start your business, but the only thing is, I believe you cannot work as an employee for your business. But you can technically you can still hire and then you can run your business. But related to the visa implication, I would strongly recommend talk to your immigration attorney. But nothing prevent from you to start a company and become an entrepreneur. In fact, my understanding is, I think if you start a company and maybe hire some 10, 15 employees, and I think there is a threshold like 1 million or 2 million, I think you could be eligible to even apply for EB-5 visa. That was my understanding. So there is a higher probability you may get your green card even faster. So I think the visa restriction shouldn't stop for you to start your own company.
Shri asked, I believe you said something about morality. Is this a problem in the startup community?
I'm sorry, morality. I don't think it's a problem. All I'm saying is it's a differentiation, right? So unfortunately, I'm seeing a lot of these ethical issues. I think in the big companies, I don't think you'll see in the startup level. And we all know Wells Fargo. It was a big bank, and I think they unethically start opening accounts for their customers, open millions of fake accounts, right? And you can see because of their actions, they lost billions of dollars. Their share price dropped, and they lost a lot of valuable customers. So that's why I think I was reiterating. I think when you are in the startup at the beginning, I think once you start to maintain your ethics and honesty and integrity, I think automatically you'll be on the kind of a top level.
Raja asks, could you please outline the steps to start an online education website?
I know this is very kind of a specific question. I think maybe we can take it offline. But as I said, the education industry is another very big industry. So I would recommend, if you are interested, try to find some small segment, then do customer survey, customer validation, then go after that market. Okay. I think that will be a better approach. But if you have some ideas and thought process, please reach out to me after this session, and definitely we can discuss in detail.
Shafil asked, what kind of small businesses can you register, and what are their pluses and minuses of SCORP versus LLC?
So typically, there are a lot of pros and cons the way you set up your company. But I would recommend, once you decided as a startup, and in the future, if you are going to get funding, I would recommend go for like a corporation. You incorporate, don't go for an LLC. By incorporating your company, it will be easy to structure your equity. Then later on, you can easily attract your investors. And normally, investors won't invest if you are just an LLC. So that's why it's better to incorporate your business as a Inc. So that'd be a better strategy.
Partha asked, you mentioned a group name where all the small businesses employers can join. Can you elaborate more on that, like name and how to join?
Yeah, so I was talking about the accelerators. So primarily, I said I think if you even Google it, you can find a lot of accelerators. I was telling the popular ones are Y Combinator, Techstar in New York, AngelPad. Even as I said, I'm in Washington D.C. area, we have a Startup Ignite, and I'm pretty sure if you research, you could find a lot of accelerators all over the place. And the first thing is, just like you're going to join any college, I think I would strongly recommend research about the accelerator you are going to join. Yes, some accelerator maybe focus on health-oriented startup, and some accelerator maybe focus on education-oriented startup, and some accelerator may be focusing on maybe like medical devices sector. So that's why I would recommend analyze each and every different this accelerator and find out because pretty much if you go to their accelerator website, you can find out all the mentors and the previous cohort, what kind of startup already gone through the program. So by analyzing that, you can see whether that will be a right fit for that. And also in the accelerator, typically there are two different type of format they follow. One is like a cohort model. So once you join, what they do is they put you in another group of startup CEOs, maybe like 10 or 15. So all of you guys go through some kind of a structured program for like 6 months. So during that 6 months, you will be validating your idea. They'll help you to pitch your product to the investors, and they'll connect with their network and validate, introduce all the different channels. So kind of they educate you about all the different things, and you will be doing on a every day-to-day basis so that it will get familiar. And since it's a very structured program, and definitely you can see the momentum. So by the end of the program, at least you will be in a better position. Maybe when you enter, all you have is maybe an idea. But by the time you finish your accelerator, I think at least you'll be maybe in level 1. Samantha, I know you've gone through the accelerator program, so do you want to give a few insights how it helped from your end?
Hi, Mari. Sorry, when I unmuted, it talked over you. Can you please repeat the question?
Sure. No, I was asking about, I know you attended the accelerator program, right?
Yes.
Could you elaborate how it helped you?
Yeah, it was extremely helpful. So the Startups Ignite program, which is where I met Mari, they pair you with mentors who can actually add guidance in specific areas for your startup. So Mari has been extremely helpful on the financial side. Another mentor of mine helps with our regulatory strategy. And I'm also in a new accelerator through one of the state-funded agencies called TEDCO, based in Maryland. So they provide funding as well as paid executive support. So they provided 3 paid team members to join JuneBrain for 6 months. So I think funding and networking are the biggest benefits for me from accelerators.
Great. Yep. Thank you so much. You can move on to the next question.
Pitchy asked, when do you know your idea/startup is not going as per plan?
Okay, that's a great question. So I think if you couldn't get any customer who are willing to pay for your product or service, then I think pretty much you can understand, I think your startup is going in. So I think that's definitely something you can keep watch for it. But again, it depends on your product or service, right? Because let's take, for example, JuneBrain, Samantha's startup. So she's actually developing a medical device. So it will take a very long time to produce any revenue. But as long as you are meeting the goal or getting the patent, so you need to kind of have a milestone established and keep meeting those milestones, then I think definitely you are progressing. I think, maybe getting funding, if you definitely get some funding, that means that's a good sign. But definitely you will find out whether you are making progress or not pretty very easily. Okay.
Patty asked, where and how can you raise funding for startups?
Okay, maybe since we have a lot of questions about funding, let me quickly cover that slide 1 second.
I think you can read out the next question also, I think.
Oh, okay. Yeah, please go ahead.
As a startup, what kind of service can I get from you? Will you be able to help us find investors?
Yes. Okay. Before that, let me talk about the investors. Okay, how to find investors for your business. So my recommendation is the potential investors are your parents, friends, relatives, then angel investors, then VC. So initially, I would strongly recommend try to get the funding, what we call it like a seed funding, from the circle you know, from parents, friends, or relatives. At the very, very early stage, it will be very difficult to get the funding from angel and VCs. So my recommendation is at the beginning, let's go with the people you know, because again, initially you may not need probably millions. I think it will be definitely maybe for 25 grand or 50 grand in that range. But once your funding threshold increase to maybe 100 or $250,000 or $500,000, then that time you go for angel or VC. Okay. Then the next thing. So when you go to the investors, don't just look for just the money from the investors. Okay. Look at the investors' network connections. Okay, how valuable that is. Because more than money, their connections and network will probably add more value. So that's one important thing. Then the another thing is, it's very difficult to get the funding from the investors, okay, which is a very, again, I am saying with all honesty and respect, getting funding from investors which is a very, very toughest thing. You are not going to get yes in the first meeting, or maybe not in the second meeting, or not in the third meeting. It's going to take a hell of a lot of time. So what you have to do is don't get rejected or don't be pessimistic. All you have to do is, once you identify these investors, keep them in the loop. Okay? Send them the emails, as I said before, the newsletters. Explain them about your startup, how you are progressing, what milestones you are meeting, and whether you have achieved any patents, include that. So, or any challenges you are facing, just be honest about what you are doing. Then, definitely down the road, they may change their mind, because it happened. Actually, I'm going to walk through some of the investors, some of the founders' experience. I'm going to cover that. There are a lot of instances. One of the startup founder, almost 70 investors initially rejected her idea. They didn't invest not even a penny, but she keep on sending this email and keep contacting on a regular basis. Then within a year, almost 50 out of the 70 investors invested in our company. So that's why it's a very lengthy process, and you have to develop that trust. So don't expect to get the funding like anything. I know in Tamil cinemas or Indian movies, I know the hero will get kind of poor from rich. He start a business. By the time the song finishes, he'll be like a millionaire, billionaire. But that's not going to happen in the real life. So that's the reality. Okay. Then another thing is, I would strongly recommend try to understand how to value your money, and understand from investor side what they're looking for. These are the technical terms probably you heard. 409 valuation, seed round, Series A, Series B, Series C, term sheets. So these are the terminologies. And these investors, whether it's angel or VCs, they use a lot of different valuation methods to value a company. Remember, they are going to invest in your company, right? So what they do is they either use the asset method, income method, market method. So the asset method is the one kind of analyze the underlying assets and come up with a number how much your company is worth. Then the income method, that's a very popular one. It's future discounted cash flow. Actually, I helped some startups to do the valuation. So this is what it is. If I'm sharing the spreadsheet. So what it is you kind of document your sales revenue. So you can see here, so I have the actual numbers for year 2017, 2018, and 2019. But I don't know what my revenue is going to be from 2020, 2020 in the future, right? So you have to kind of project your sales revenue. So that's one thing. Then you have to kind of analyze, find out how much your growth rate. So this company, this is one of the real companies. So initially the startups always grow very fast. Their growth rate will be much higher at the beginning. Then as you move forward, it will get mature. Then you have to kind of document your expenses, your core expenses, your selling, marketing, R&D. Then you have to kind of subtract all your expenses from your revenue. Then you get your, the technical term is, we call it a free cash flow. One thing is we don't include the depreciation, because the depreciation is only for tax purpose. It's not a real cash expense. So we kind of add it back. So you compute the free cash flow. Then in the finance term, it's called, it's a discounting. So this is one mathematical formula. So all the future cash flow, you discount and bring it to, as of now, the current year. Then you add all those things, so that's your value of the company. Then depending on your equity structure, let's say if you have 1 million shares for your company, you divide the valuation, then you get the value of share. Okay, so that's how you value a company. Pretty much the same model the analysts actually use for value even Apple or Amazon, all the public traded companies. Okay, so I would recommend this. This is a very simple exercise. So by doing that, at least you get an idea how much your business worth. Again, you can come up with some rate, and so the investors also will do that exercise. And in addition to this valuation method, the investor also looking to what are the milestones you have achieved in the past years. Then they look for IP, intellectual properties, any patents. So there are two types of patents, non-professional and professional patents. Yeah, the patents are very valuable. Okay? Then the competition dynamics, they look for what kind of partnerships you have and your quality of management team. So they look at a lot of other things to come up with a valuation actually. So I think as a CEO and founder, I would strongly recommend do this by yourself so that at least you can also find out how much your company worth, so that when you talk to your investors, you can kind of disclose all those things, and it will be helpful to raise the funding. Okay. Samantha, do you want to add anything? I know I think I have a few slides. Please go ahead. You can talk about your experience.
Okay, sure. So for this slide, we actually started raising, our first funds came from grant funding, so federal grants through the NSF program, the National Science Foundation. And I would highly recommend grants whenever it's possible. There's a wide range of them for many different industries. And they essentially provided funding for us to develop a working prototype of our device and initial feasibility testing. So now we've raised our first round of funding from 2 angel investors and the state-funded investment arm, TEDCO. And next year we'll raise a seed round that will cover the rest of our milestones through product launch. So that includes developing our commercial product, which we're doing right now with the manufacturer, as well as completing any clinical studies needed to gather data for our first customers. And we're always applying for grants in parallel. Always apply for grants. And then the next slide. So just as an example, our seed round, which would be $1 million, we're raising that in case our current grant proposal, which is an NSF Phase 2 grant, is not successful. So if it isn't successful, it will provide around $1.5 million in December, and that's, again, totally free money from the government to commercialize your technology. So for us, that would again go towards completing our product development, as well as salaries and overheads, taking our current team, which is part-time, and converting them to full-time employees, as well as continuing our patent prosecution and going through the regulatory pathway with the FDA.
Thank you, Samantha.
Okay, sure.
Okay. So before we move on, so Nandin, do we have any other questions?
Yeah, we have 3 more questions.
Yeah, please go ahead.
All right. Raja asks, customer needs assessment also requires investment. How does one raise a seed fund to this?
Yeah, normally for the customer assessment, I don't think you will need that huge amounts of money. So I would recommend for that funding, you could easily use some funding from your within your family circle. But once, as I think Samantha was saying, once you started to develop the product, that's when you definitely need the funding. So I've seen normally if you go for the product, definitely the funding is critical because your cash burn rate is going to be very high. So that's why I would recommend, so once you, let's say you as a startup, you are going after some product, do a lot of planning at the beginning. So you have to have kind of a capital needs for the short term and the long term. So make sure that raise enough seed funding to cover at least for 1 year. So you have to kind of calculate how much your burn rate at a month. Then you have to raise that funding to cover that for 1 year. Then also in parallel, never stop raise funding. Okay, keep looking and keep raise the fund to cover maybe at least next few years. I think the main challenge I have seen a lot of the product related startup fail because they fail to raise enough fund at the beginning. So sometimes they think, oh, I got $1 million fund, but unfortunately it will run out very, very fast. So that's why I think it's very critical to the planning and raise the funding, the required funding, and never stop. And the good thing is once you get funding from few investors, because at least that's kind of it proven, right? Then you can onboard or get even more investors down the road. So you can get recommendation from your current investors as kind of a word of referral to get your future investors too.
Srini asked how to decide the pricing for the product, or what is the pricing strategy?
Okay, great question. So when it comes to pricing, so make sure that you have a decent profit margin. The reason is I know a lot of startup initially they think, okay, I can sell it for whatever just the cost to make or even below the cost. But unfortunately, that's not sustainable, right? Because the reason you started your startup because you want to add some value. You are trying to solve some business problem or customer problem. So that means so make sure that you set a price according to your value you provide. Okay, you can do a lot of your competitor analysis. In fact, I can share some real incident. Probably we all know Walmart. The founder name is Sam Walton. So when he started his first department store in 1950, so he doesn't know how to price for his products. Okay, so he was selling a lot of the department store items. But what he did is every day he go to his competitors' department store and check each and every item and check their prices, how much the price the competitors are selling, and also see which items are selling faster. Okay, then he kind of analyze. Then by doing that, he found out, okay, now which items are selling faster, and he kind of see the profit margin the other competitors are doing, and then try to come up with his own strategy. Okay, and I think that's something you can also do. And again, but if you are offering some premium product, obviously, then you can charge even more, because a good example is iPhone, right? All Apple devices are high premium. If you look at their gross margin is 80%. The iPhone, even though it costs maybe $100 to make, but they are selling for $1,000, which is a huge profit margin. Because the reason is it's a premium product. But if you at the same time you go for like groceries, its profit margins are very, very thin, maybe 2%, 3%. So again, typically if you are like a software, any software services, their profit margins are like 90%, definitely above 80%. So my recommendation is, so do the analysis depending on your product or a service, and then compare with your competitor offering and see the value. Again, part of your customer interviews and validation, ask that question, okay, if I'm going to offer this product or service, are you willing to pay for this money? You can definitely validate that. So use all those things to set the price. Okay? But my another advice is never compromise your margin. You need to have, because you are running enterprise and business, so without having a decent margin, definitely you'll run out of business. There is no way you can survive.
This is a question for Samantha. Shrink asked, how easy is it to register our ideas as patents, and did you find any challenges while registering for your patents?
Sure, that's a good question. So the first part of the patent process is filing your provisional patent application, and that's actually easy enough to do on your own. It's fairly inexpensive, so I think I paid around 100 or no more than 200 to file the provisional patent application. And what that does is secure a point in time when you had the idea for whatever you're developing, so it gives you a priority date. So the first thing I did, even before I officially formed a company, was submit all the designs, all of the ideas for my technology as a provisional application. And then you have a year from that point to file the full patent application. I think from that point on, it did get a bit challenging. So working with a patent attorney was very critical for me. So for example, one challenge, I tried to throw the entire kitchen sink into my patent. And the patent office will typically come back and say, hey, it sounds like you have 2 or 3 inventions. You have to pick one and continue with just that portion of what you originally submitted. So there are a few challenges that come later on down the road, but that initial provisional you can certainly do on your own, and it's a pretty easy process.
Siva asked, what is the best way /process /tools to perform customer validation for a B2C product?
Okay, for business to consumer, I think the tools, even spreadsheet or Microsoft Word is fine. Okay, so the main thing is first try to develop your questionnaire. Okay, what are the questions you are going to ask? So that's very important. And I think for that you can talk to your mentors or advisors or other CEOs to kind of understand what questions or what interview questions you are going to ask. Then once you do that, then start interviewing few customers. Then based on their response, I would recommend keep tweaking your questions, because remember, whatever the question is not static. Feel free to keep customize it depending on the feedback you are receiving from your customers. Yeah, that's something. It's going to be like a living document. Because some of the, I assume when you're interviewing the doctors and patients, I'm pretty sure whatever the questionnaire you put together at the initially probably far different now. Is that right? You probably will be updating, keep revising it.
Yes, yeah, that's true. So our business model canvas, where we pretty much put a summary of all of our customer interview results. The very first canvas I had is totally different from the canvas we have today. So it's definitely evolved.
Thank you. Yeah,
These are all the questions we have. I think we can continue on the presentation.
Okay, thank you. Okay, so next let me quickly go through some of the kind of experience or knowledge sharing from the other founders. So I would strongly recommend, I'm not going to cover this, I don't think we'll have enough time today. So in the NPR, they have a podcast called How I Built This. It was conducted by Guairas. There are hundreds and hundreds of company founders gave the interview, and they talked about their success, failure, their experience in that show. And so please listen to that. But for today's presentation, what I did is I kind of documented some of the founders' valuable feedback. So I'm going to kind of share it today quickly. So one thing I found from all these podcasts, there are some characteristics are pretty common. I think all the founders, they had a great passion, persistent. They created some unique product or service, and they identify their core customers. Then they flip every stone. They talk to every vendors wherever they go. And money is not the motive behind it. They try to help the customers solve their problem. and a lot of hard work at the beginning. Okay? And they surround with always positive-minded people. Okay? And let me quickly go through a few scenarios. So the Chesapeake Candle, so this company CEO attended a lot of events. Then by attending the event, she tried to, and it's all trade shows, so she's trying to sell a product. Then she tried to identify then which product sells faster during the trade shows. That's how she found the candle was the one which was selling very popular. Then she started to focus on that, and it was a big hit for her. Okay. Then the another company, Crate and Barrel, this company CEO Gordon Siegel. So he said that travel is very good for startup entrepreneurs. It will give great ideas and connections. I know through COVID it's not possible now, but I think once everything gets back to normal, that's something you can consider. And another his recommendation is any business will always get into risk. There is no way we can avoid risk, but always expect risk and mitigate the risk creatively. And I think another his advice was always embrace new technologies and take an advantage of them. Because this particular company, Crate and Barrel, even in 1997, they immediately adapted the internet selling, e-commerce. And right now, probably more than 40–50% of their selling is happening online. So imagine right now, the COVID situation, probably this company could be doing phenomenally well. Then we all know the ride-sharing company Lyft. Actually, John Zimmer, the founder, so he got that idea actually when he traveled to Zimbabwe in Africa. That triggered the new idea he implemented in the US. And his goal was to kind of reduce the pollution in the planet Earth. Then Kate Spade, if you look at, I think she told in the podcast at the initial starting stage, pretty much she did everything. She designed, shipping, marketing. Probably you may have to do the same thing until your business starts to scale. Then Virgin company Richard Branson, I think his recommendation was, if you see a company that's not delivering their services, product with a great value added, that's something you can definitely go after that business. For example, in UK, when he was there, the banks were charging 2 to 3% even just to take the deposit. Then he saw that opportunity, then started the Virgin Bank and offered no fees. Then he attracted a huge customer base and grew his business. Then there is a company called Edible Arrangement. This guy, Tariq Farid, so he kind of started one flower shop, and he struggled a lot, but he came up with an idea. He kind of linked the fruit to the flower. So basically, he cut the fruits like a flower shape, and it was a big hit. And he franchised the business, and it was successful. Then Samuel Adams, I think his quote was saying, in the life there are some things are scary but not dangerous, but some are dangerous but not scary. So I think starting new business, it's not as dangerous, but definitely it will look scary. Then Warby Parker eyewear business. Probably you guys know all the eyewear business are dominated by big guys, but the Warby Parker decided to go after that. So their model was sell this eyewear for very cheaper price, and they succeeded. Then another company, Melissa and Doug. So when they started this business, they come up with a totally new idea at the time. So they decided they produce the toys only wooden-based toys, no plastics. But unfortunately, they got huge rejection. Imagine 600 toys, whatever they designed, the vendors rejected it, but they never gave up. But then after that, it was so successful. Then Southwest Airlines, I think his concept is without taking debt, using the free cash flow to keep reinvesting in his business and to grow their business. And I think another his advice is don't just focus on growing your market share, but maintaining the profitability is very important. I think I talked about before. definitely you need to have a decent margin to survive, and don't simply just focus on the market share. Then another one, click bar. I think this is another lessons learned. Always use corporate counsel or attorney to check the contract agreement before you are signing any handshake agreement with your supplier, banks, and vendor. Because this particular company, this particular CEO, they just signed an agreement with the supplier without read through the document or without getting help from the lawyer. Unfortunately, the supplier was performed very, very badly, and he decided to cancel the supplier and switch to another supplier. But that particular agreement had a clause: if he had decide to cancel the supplier, then he has to give away 51% of the ownership of the company. Okay, unfortunately, he didn't read that. Okay, and it was a big, big mess. He has to go through that. So that's why when you are in the startup, any legal document, always use a lawyer to review that, make sure that you are signing the right document, because it will come back and bite you pretty bad at a later stage. Then another company, Radio One, the founder, she struggled a lot at her early age, and she decided to start her own radio company, because, and the investment she needed was very huge. She needs like $1 million loan. So she went and knocked the door for 32 banks. Okay, each bank manager rejected, but she never gave up. She again went to the 33rd bank, then they agreed to lend, and she was so successful. So again, you can see, never give up. With the entrepreneurship, you have to keep trying. Okay? That's the only way. Always be optimistic. Then the QRX company, he visited almost 300 to 500 gyms and trained his product to scale his business. And Thermologica, I think the founder recommendation is, as an entrepreneur, always develop your skill, any skill. I think that's going to help you down the road. And another company, Patagonia, I think that's another strong, good advice. Allow your employees to make independent decision, give freedom, like ant colony, no leaders, but still the job will be done. And look for long-term stable growth versus short-term enormous growth. Okay, always go after a long-term growth, stable growth. Okay? Then we all know Shark Tank, the Mark Cuban billionaire. So the way he was so successful is he always looked for the upcoming technologies, then build companies around that. So that when the technology take off, then his company also will take off. That's how we make money. Then Starbucks founder, I think he traveled to Italy. That's when we got the idea for implementing the coffee shops in the United States. Then Stonyfield, I think when you're going to go after high capital intensive business, I think you can go out for SBA grants or loans. I think Samantha also used that strategy. Okay. Yeah, I think that's all some of the experience. So I think the summary, I think the statistic says the failure rate for any first-time startup is more than 90%, but the success rate for the second startup, the same founder, if he didn't give up and try for the second time, the success rate is actually 90%. Okay, so that's why keep trying and never give up. Okay, I think pretty much we covered. I think we have only a few more slides. So the next thing is how to hire and train great employees. Okay, so first thing is, don't force anyone to join your startup. Okay, explain your company value and vision, what trying to help the community, to the potential hires. Let them join with their own interest. And do not micromanage your employees, and allow them to make their own decision. And probably you can make them as shareholders of the company. You can set up your compensation so that you can provide some stock options if they perform well. because by making them also a part of owners, it's going to eliminate your lot of admin overheads, and they will perform very well, and provide a lot of learning opportunities, allow them to learn and grow, and pretty sure they'll never leave your company. So that's the strategies you can use. And another important thing when you're a startup at the beginning, try to control your costs. Always be lean, which is a very, very important thing. A lot of startups I have seen, they ran out of money because they failed to manage their costs. So from day one, make sure that manage your cost very well. Okay? So because once you are doing, then automatically all your team members, it will be part of your company culture. So that's why, let's say when you run into some crisis, economic downturn, or let's say some product failures, or if you lose some big client, you can still survive. Because the good example is, if you look at as of now the COVID situation, there are a lot of companies are going bankrupt. You can start with a heads rental company, or even a lot of retailers. If you look in depth, those companies didn't manage their debt and cost very well. So that's why they are going bankrupt. So I think that's a very good lessons learned for startups. Then finally, to grow your business, okay, always keep looking for an ideas how to scale your business. The one model is a franchise. So using the franchise model, you can scale. Or the other model is you have to keep looking for your funding, raise enough capital so that you can start scaling. But again, you have to plan for next 5 years. Okay? Because when you are scaling, make sure that you are also growing your partners, suppliers. Otherwise, it will be very difficult to scale your business. So you have to consider your complete ecosystem. So that's why you have to develop strong strategy once you decide to scale. Because the scaling, that's something you cannot just scale it within a month or within a year. So it has to be a very, very long strategy which you have to develop. Okay. Yeah, I think the last thing, I think in to conclusion or summary, I'm just repeating again. If you look at the pattern, the founders were very successful. They are being persistent, showing empathy, constant communications to their mentors, investors, team, great sales skills, having a long-term vision, maybe go after the big market size, less capital intensive. You make sure you have a good profit margin. Make sure you have a switching costs are high for the customers. Maybe networking effect. Make sure that you have a very low customer acquisition cost, which is very critical. And again, you have a strong team and board of advisors and mentors. And finally, never give up. Okay? And I do have some good books for reading. Pixar, Disney bought this company. The Making of a Company, it's a great book. Barbie and Ruth by Robin and Gerbert. I read that was a good book. And we all know Lego. That's a bit by Brett. I think Lego pretty much rewrote the rules of innovation. Now they're very so successful. And there is a new ideas from dead CEOs. That's what I was talking about. Walmart or Bank of America CEO. That book was pretty good. So I think during your free time you can read these. You'll learn a lot. Okay. Okay. With that, I think we can move on to again some small Q&A and the networking session. So for the networking session, after we'll take any additional questions. So whoever currently entrepreneurs, so please post your name, your company, then you can unmute your audio, then take a minute, talk about your company and what you need. Maybe other entrepreneurs or investors could reach out to you. So please use this opportunity to this networking. Okay. So let's see if you have any additional questions. Nandini? If you have any additional questions, please go ahead and ask for it. Okay, if not, then we can start with our networking. So, you just post your name. Okay, anyone want to introduce or not sure? Sandil, are you there? Okay, let's start with Srini.
Yeah, so Srini has a Brill App Software and Solutions, Ltd, and Sales and Service-based CRM product.
Good evening, sir.
Yeah. Please go ahead, Srini. Yeah.
Yeah. So almost we have been developing Brill, which is a CRM product, for more than 3 years. Okay. Now we are going to launch this product maybe this month or the coming month. Okay. So the complete 3 years what we have done is a bootstrapped one. So we spend the money from our pocket. Okay. So is this the right time to look for the investors still actually?
Sure. I think I would recommend maybe try to roll out to a few customers and maybe try to gain some revenue. I think once you have get some revenue, even few customers, then I would recommend go after investors.
Yeah, we already have a few customers. I mean, those who are started already paying to us.
Okay. Then I would recommend definitely I think you can look for investors.
Yeah. So apart from that, is that any marketing strategies can be taken to reach pan India somewhere and something like that? I mean, apart from that, looking locally or regionally. So is that any way we can take this product pan India?
Okay, I think the recommendation I will provide is start reach out to some partners, try to develop maybe some partners network, or maybe whoever in the call, please note down. I think he already pasted his company detail, so you can please reach out to Srini. Then I think you guys also help him. So I think Srini, definitely look for some partnership opportunity to expand your marketing for your products.
Thank you, sir. Thanks for the time. Yeah.
Okay. Nandini, you can call out the next.
Okay. Senthil is Continental Technology Solutions.
Yes, please go ahead, Sandeep. Yeah, it looks like audio issues.
Sorry, we can move on to the next person. Sarath Krishnan, Godish Inc.
Yeah, hi. My name is Sarath Krishnan. Thanks for letting me talk for a couple of minutes here. So we've been building this product. The product is Godish. It's a dish-centric product where where our application will serve the customers to discover dishes in the locality and find experiences about the dish. It's a product at a very high level. So we are in the pre-product situation right now, and we're planning to launch this product in California in the coming months. I think I have a very open question to the host. What kind of advice would you provide for a startup similar to us who are in the B2C arena? And also, I think many people have already asked about how to reach out to the founders. I'll probably skip that question. But other than that, how do we validate the idea before reaching out to the VCs that the idea is indeed good? Do we get some mentorship around that? If you can please explain.
Sure. So, Sarath, as I heard, your product is primarily for enterprises, right?
No, it's for B2C, for the consumer.
So you're going after the consumers.
Okay.
Okay. So then I would recommend, since the consumer market is very big, right? So I think you can probably find out some small segment of customers, then try to validate your product first. So I'm not sure I've done that already. Or
we try to do that in a very small scale, but I think if that is the proven method, or are there any alternate methods for us to validate the idea?
Yeah, I think I would recommend that's the proven method. So usually let's go after the segment, the small segment maybe in your local location. Then you can kind of gradually expand to maybe the neighboring cities or within your state. That probably you can extend a little further, because initially I think what you can do is you can use all the different social media strategies, or a lot of local events, right? So use that heavily, and also use all the network within your personal network. Then get the referrals, then get some promotion through them first.
Okay.
And then after that, then you can go after the expand your channel outside.
Yeah, I'll thank you for that. I'll probably take opportunity. I'm not sure exactly the audience is here in this call, but I've shared my email. If anybody is interested in knowing about the product that we're developing, please feel free to reach out to us. We're more than happy to share and talk more about it. Thank you.
Okay. Thank you, Sharath. Yeah. Okay, we can move on to the next. Okay, anyone else?
Hi, this is Rajesh. I joined late. Is it possible to get a recording after this call?
Sure. Definitely, yeah. Mm-hmm. Yeah, let me put my email address. Here I can. So, Maury at amatua.us. So if you guys want recording or slides, please reach out to me. I'll share. And I know Dinagaran, I know he's from India. Do you have any questions, or do you want to introduce Dinagaran? No, actually, maybe probably.
Hello.
Yeah, please go ahead.
No.
Okay. Thank you. Okay, I think that's all for today. I don't know, Sendil, if your audio is back, you can unmute, or if you want. Sendil, are you there? Okay, I think looks like he's having some audio issues. Okay then, I think with that, I think we can close our session. Thank you everyone. Thanks for attending this event. I hope this was useful for you guys. And please reach out to us, reach out to me if you need any, if you have any additional questions or help. Okay. Thank you all. Have a nice weekend. Bye. Bye-bye.
I appreciate taking this session. Thank you.
Thank you.
Thank you, Murray.
Yeah, thank you.